Welcome to Alpha Recap, your aftermarket rundown from stockalpha.ai. We're coming to you after the close with all the big themes from today. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Lots to unpack from today. Geopolitics, earnings shocks, and a structural shift in AI infrastructure.
Markets opened with a relief bid after reports of a pause between the US and Iran held. Brent crude slipped back below $90 a barrel, and futures were about 1.5% higher at the open. But that was only the start of the story.
Right. The relief trade set a tone, but the bigger headline by far was the widening realization that optical networking, not copper, is the critical path for the accelerating AI data center buildout.
So, what really stands out here is the scale. Reuters cited conversations suggesting NVIDIA may guarantee financing for an OpenAI campus. Some reports put that at about $250 billion.
Yeah, that tracks. I mean, when you step back and look at this, analysts are using multi-$100 billion numbers as working estimates. Some wave around about $500 billion and a 10 gigawatt power profile for a full-scale build-out.
Hold on, say that again. 10 gigawatts? That's massive.
It is, and the simple physics point is critical. Copper interconnects run into practical limits at roughly 1.6 terabit speeds. Beyond that, electrical losses and heat make copper impractical at rack scale. Optical engines transmit data with light, which reduces attenuation and uses much less power per bit over distance.
Right. And the other thing is that shift pushes CapEx into new hardware categories. Photonics, optical engines, high-bandwidth interconnects. Analysts are naming specific beneficiaries in that supply chain.
Exactly. Companies that can deliver optical engines and silicon photonics look well positioned. Some notes call out names in photonics, including a firm like POET Technologies in that context. But there's debate about who captures the margin: pure photonic suppliers, systems integrators, or incumbent networking vendors. So there's a concentration question. How many massive campuses actually secure financing? How quickly do optical engines scale versus incumbent silicon solutions? Those timing questions matter for who wins.
And while that structural story was unfolding, we had some noisy company-level moves. Tesla suffered a sharp sell-off after second quarter results left operating profit at about $400 million and, reportedly, wiped out roughly a year of gains for the stock.
Not a great day for Tesla. At the same time, private SpaceX shares hit fresh lows despite a near-flawless Starship flight. Some reports cited levels near $115, others nearer to $90. But the takeaway is consistent. Liquidity and insider selling can dominate price action in private markets.
Yeah, that was striking. Honestly, I was a bit surprised by this one.
I mean, when you step back and look at this, operational success no longer guarantees a re-rating if the market's liquidity mechanics are misaligned. Private secondary trades can trade at steep discounts when exit pathways narrow.
Abbott also had a rough day. Shares slid about 3.6% to near 139 on guidance and litigation worries.
Right. Those idiosyncratic stories, earnings, guidance, litigation, continue to create short-term volatility, even as the macro narrative shifts.
Short reactions. Right.
Yeah, that tracks.
Let's dig into the implications of the AI optics shift. Can you explain why copper hits a ceiling at around 1.6 terabits and why that forces data centers to go optical?
Sure. Copper carries signals electrically. As speeds go up, the signal degrades more quickly and generates more heat. You can compensate with power and cooling, but at some point it's inefficient or impossible at rack scale. Optical interconnects use light, so they maintain signal quality across longer distances with much less energy per bit, which matters hugely when a campus might be measured in gigawatts, and when analysts say as much as 60% of power in an AI campus doesn't even touch a chip. It's cooling, power distribution, interconnects.
So utilities, chip makers and photonic suppliers all suddenly have skin in the game.
Yes, and that's why the CapEx trajectory matters. If these campuses scale, it influences suppliers and energy demand. It also tilts where value accrues across the stack.
Let's switch gears to another interesting piece from the day. Sand batteries. Give us the quick version.
The Poor9 and Sand battery uses roughly 2,000 tons of sand and reported about 70% thermal round-trip efficiency. It's not an electrochemical battery, it's thermal storage. You heat the sand and store the heat for later industrial or district heating use. At scale, it can mitigate renewable intermittency and shift demand for electrical heating or combined heat and power systems.
So, the investor angle there isn't a single stock call. It's more about services, installation, and industrial heat management.
Exactly. Energy infrastructure allocators might want to model deployment and EPC contractors rather than expect a single disruptive equities winner to emerge overnight.
Okay, now a short bit on options and earnings. Apple had rallied about 20% since late June and finished the day less than $2 from an all-time high. We also saw unusual options flows ahead of earnings.
Increased activity in options typically raises implied volatility. That can magnify post-earnings moves and spill over into supply chain names and index derivatives. Dealers and institutional hedging can create big directional squalls even when the fundamental beat or miss is marginal.
Got it. And macro-wise, traders are leaning on market-implied odds for Fed messaging. Kalshi contract figures like 42%, 28% and 80% were cited, and those probabilities shape positioning in rate-sensitive and commodity pockets.
Yes. When the market assigns specific odds, it changes hedging and flow. That's why Fed narrative still moves markets, even as structural stories like AI and energy storage play out.
Where market views diverge is important. So let's highlight a few of those open debates.
On SpaceX, analysts agree on the lesson. Liquidity can trump operational success, but they disagree on how big the near-term downside is and whether an upcoming earnings or liquidity window will force savings that pushes prices materially lower.
And on AI CapEx, most see multi-hundred-billion-dollar potential, but there's argument about timing, concentration, and who captures the margin in the optical supply chain.
Finally, on energy. The US-Iran pause gave short-term relief, pushing Brent below $90. But some participants argue the shock was merely deferred. So energy outcomes remain wide and still influence inflation, rates, and sector returns.
Time for implications by investor type. Hit me with the quick bullets.
Long-term growth investors should model CapEx cadence and integration risk around photonics and data center power. Event-driven traders need to price higher volatility into SpaceX liquidity events and big earnings like Apple. Income and value investors should watch commodity moves for energy income names and industrial margin plays like Ford's aftermarket efforts or FedEx's healthcare logistics pivot. Private market allocators must put explicit assumptions on exit timing and liquidity for late-stage shares. Clean energy allocators should watch thermal storage deployment and related EPC opportunities.
Short reactions. Right.
Yeah, that tracks.
Final strategic takeaways for listeners.
Analysts note you're seeing a mix of structural change and short-term event risk. Keep explicit scenario analyses for AI CapEx and energy price regimes. Recognize liquidity as a return driver in private markets. Treat near-term earnings and Fed events as volatility drivers, not confirmations. And separate duration risk. Long-duration exposure to AI themes can be considered independently from short-term execution and liquidity risks.
Good summary. Quick reminder. This is market analysis for informational purposes only. We're not recommending buying or selling any specific security. And this isn't personalized investment advice.
Exactly. Analyst sentiment labels reflect observed positioning and reported metrics, not investment advice.
All right. What to watch next week? Confirmation of any NVIDIA or OpenAI campus financings, SpaceX shareholder liquidity signals and the earnings window, MasterCard and Visa for consumer spending cues, Apple's report and options flows, and any reversal in US-Iran headlines that could push Brent back up.
Those are the high probability catalysts. Watch for flow-driven moves as much as fundamental updates.
That's our recap. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.